I've got a couple students tonight presenting deals. Tien's going to present a deal. Joel through Christian's going to present a deal. Who else is presenting deals that are students? I think maybe just 2 tonight. Who? So we got at least 2 students presenting deals tonight. If you're an investor-friendly realtor, if you're a real estate agent, raise your hand. Look around the room, guys. You got real estate agents in the room. They can help you find your deals. They can help you sell your deals. They can help you with comps if you don't have comps. Those are your agents. Fix and flippers, raise your hands. If you're a fix and flip investor, raise your hand. Jad, raise your hand, buddy. I know you're not wearing that Adidas sweatsuit tonight, but go ahead and raise your hand. Jad, how many projects are you working on now? And you're buying 4 new ones, right? Gary, how many projects are you working on? Gary's working on 5. Jad's about ready to buy 4. Tien, how many projects are you working on? 1. Oh, wow. It's terrible. We got to get you some more projects. Guess that's why you're here, right? All right. Buy and hold investors, raise your hand. Buy and holds, buy and holds. A lot of you guys buy and holds. Money, raise their hand. If you got a green sticker, raise your hand. I see Jim's in the group. I see Mark's in the group. Joel Condor, Corey, raise your hand. Corey back there. Who else is the money? Your money. Naveed's money. Who else? Anybody else? Okay. Mohammed works for Freedom Bank of Virginia, commercial lender for Freedom. Shout out to Freedom. Now, if you guys don't realize, contractors, raise your hand. Giovanni, I see that you're here. Any other contractors? I got contractor in the back. I got Giovanni. Carrie. Carrie does trash outs. What else you do? Contractor?
Curbside bulk.
Curbside what?
Curbside bulk pickup, trash outs.
Okay. What am I missing? Title companies, raise your hand. Scott, are you here? Scott, show up. Scott's here. Raise your hand, Scott. Any other title companies? All right, let me guys ask you a question. Turn around, Scott. Keep your hand up. Keep your hand up, Scott. If you guys are investors, right, and if I knew that I was going to get 50, 60, 70 people at a meetup to talk about deals and investment, if you're a title company, wouldn't you show up? I would. Jad, you'd show up, right? Scott's the only guy here from a title company, all right? There's a reason why I don't have title companies around this room or loan officers or money or realtors is because we want to give title companies like Scott a chance to meet you guys and to win over your deals. All right, title company. Did I miss anything? Service providers. Any service providers? So what is missing in this equation? We got realtors, we got money, deals, right? Well, that's our job. So that's what we're going to do. We're going to provide you guys the deals. Okay. Before we go any further, I'm going to give you a second. We're a part of a group called Mid-Atlantic Real Estate Marketing Association. So we're part of a commercial meetup group. I happen to have a fellow attorney. Oh, attorneys, raise your hands. Peter, Ed, any other attorneys here? Jad? Ed, Peter, Jad. Anybody else is an attorney? No? All right. So we're part of a group called the Mid-Atlantic Real Estate Marketing Association. What that is a group of commercial agents that are here. And Peter happens to be the president. So maybe stand up and tell people what Marima is all about.
Okay. Thanks, Charlie. Yes, I'm president of Marima. And actually, Charlie's the vice president. So I understand he's going to try to kick me out next year, so. So I thought I'd come here before I get kicked out. But yeah, our organization has been around for 50 years. We're probably one of the most active commercial real estate associations in the area. So if you're interested in commercial real estate or doing any kind of deals, come check us out. We meet once a month. And then we have quarterly networking events. And those are great because you also meet a lot of people that you need for deals. You'll meet attorneys, accountants, title companies,
there you go.
Et cetera, architects.
Raise your hand if you're commercial investors. Commercial investors, raise their hands. So we got a lot of commercial in here. We got mostly resi, but we got commercial investors. So.
When are your meetings?
Third.
We meet once a month, the third Wednesday of each month.
Yep.
We have a meeting next month.
Yep.
But and then we have quarterly networking events. We usually have about 100 people that come to those, and we have about 6 or 7 sponsors. Nice thing about our networking events is that if you've ever gone to commercial real estate networking events like BizNow and these other ones, you know that those are unfriendly groups. People travel, and if you've been to those, people travel in cliques. You can't, you have to try to break in that clique.
That's
and
right.
talk to people.
That's right. And so
And
why?
then, like our events, people are pretty friendly.
Right. But why is that important? Why is that important? Because since a lot of you guys are residential real estate investors, eventually you're going to get a pool of money where you want to take a look at the commercial world. I mean, that's exactly what happened to us, is that we just didn't fall back into the commercial world. We ended up accumulating enough money. We were able to buy some commercial assets. And so this group is very important for us because we'll present some of our deals in the commercial world at this meetup. And so that's how I got involved in it. All right, thank you.
Yeah,
It's
thanks.
great.
Thanks, John.
Yep. All right, one last introduction. First of all, Corey, Curtis, raise your hand. Corey, raise your hand, Curtis. Those are my two kids. Corey's into the wholesaling game, fix and flip game, and he's a kind of a hard money lender broker. Curtis, raise your hand. Curtis is in charge of all of the Clear Sky education stuff. He's the one delivering all that technology to you students. And so Curtis does the community. He does all the automated meetings that we do. He does the 1 o'clock and the 7 o'clock. So he does all the technology delivery. He did your ticket system to check you guys in. So hopefully there wasn't a line for you guys to wait to check in. So Curtis does a lot of our technology. So if you guys he's also in charge of our sales department. He's the only person in our sales department. So if you so if you guys are interested in becoming students, don't come to me, go to Curtis. All right, let's get to what you guys came here for. How did this meetup derive? Well, this meetup derived because I go to a lot of meetups every month, and I got tired, I got bored. I have ADD, and I got really frustrated with the fact that there wasn't enough deals being propagated through the meetup. So what I thought I would do is I would create a deal-centric meetup that not only had case study and then educational type of things, but we also have deals. And so one of the good things is that if you guys have come every time, if you've been 9, 10, 11 times to this meetup, you're going to see that the agenda, even though it's kind of the same, we do have some new stuff. So today, one of the things that we're going to do is we're going to discuss the current market conditions. And when you guys first showed up, you saw these guys dressing up, getting ready for that big discussion that they were doing. And so you kind of saw that. The next thing that we're going to do is we're going to talk about how we stopped the foreclosure auction in 24 hours. And I'm going to bring one of our students, Chris, up here, and we're going to go back and forth in like a little case study and explain to you guys how we did it. All right? All right, welcome. This is what it is. We meet second Wednesday of the month. Thank you guys for coming. You're more than welcome to come. Even though you don't have deals, you're more welcome to come and kind of do deals and propagate the deals. We do have this thing over here that I got to move it over, and that is your stickers, right? The sign's fallen? Yeah, put it back. Oh, my A-team. So you got the A-team here. All right, good. So you didn't know that was in your work requirements. All right. If you're fixing flippers, what are you looking for? You're looking for wholesalers. So wholesalers, raise your hand. The pink guys with the pink stickers, raise your hand. All right, look around the room if you're fixing flippers. If you're buy and hold investors, look around the room. That's who you want to approach when the meeting's over. That's it. That's the gold. Fixing flippers are purple. How about the money guys? Green guys, raise your hand. We do it for a reason. Funders. If you need money, they're raising their hand. Go see them. Go talk to them. All right? If you guys need money from us, 703-587-2475. We'll be glad to provide you with money because we got a lot of it. New investors in the blue, raise your hand, new investors. All right? Just because you're new investors, don't feel you're welcome. We don't care. New investors become motivated investors. They become investors who are experienced. All right? It could be a lot to get through. All right? Ed Grass, there's your slide.
Wait, I have the disclaimer slide. What about the intro to Ed Grass slide?
It's coming.
I mean, this is probably the best intro.
This is for you attorneys.
Should I read this really fast like a TV advertisement or?
And you know what we could do? We could make the print much smaller.
Yes, that would be good. I think I'm
Make it
required.
Latin.
Latin. I don't think there's any Latin in it. Yeah, so I guess we've added this. Obviously, there's a joking aspect, but the real aspect is we hope everybody out there makes a lot of money. Real estate investing is a great opportunity to make a lot of money. We've done pretty well, but there are risks and dangers that you have to evaluate for yourself. what your risk tolerance is, the people you're dealing with, the deal. And as Charlie will typically remind, any of the deals that we bring here, we try to vet to know that the person controls it. So somebody's not trying to sell a deal on a property they haven't even secured through wholesaling or whatever else. But we don't do any sort of complete analysis like we would do for our own deal. We'll also, though, talk about some aspects of the deal here. That doesn't mean it's necessarily complete analysis. We are perfectly happy to attack deals we see or see things that are good or bad and talk about those. So we try to share our experience, but ultimately everybody has to do their due diligence before they get involved in any deal. And we're not perfect. We've lost money, rarely, but we've lost money on a deal here or there. And the key is to make money on every deal and a lot of money.
Yep, that's why we're here. All right, who are we? We have, basically we have 6 business lines. Number one, one of the reasons why we're here is because we have fixed and flipped over 450 houses. And the way we did that was how to find distressed assets. That's all we did. Gary, how long have I known you? Long time. Yeah, 20, 25 years. It's been a long time. We were competitors in the fix and flip space at one point in time. We were fortunate enough to parlay that into fix and flip. We have a good sized residential rental portfolio. We own some commercial assets. We have a hard money business where we're a direct hard money lender. We also do tax lien certificate investing in DC and some of the counties in Maryland. And so that's a good play for us as well. Ed got us into that business. And then we've got this coaching and mentoring program through Clear Sky Education. So we have a 6-pronged business model. And what we did, though, because of our successes, that enabled us to write the book, The Roadmap to Wealth in Real Estate Investing. And so what that book basically is, it's our creation of the roadmap from investing in real estate, getting it to a point where you've created these assets where they're making you passive income off the assets. And so we basically created all that. That's who we are. 450 plus flips, 50 plus rentals. We control over 100 million in assets. We've created more than 10 millionaires right now. Some of them are in this room that I'm very proud about. I don't know if they want me to tell their names, but they're in the book. And so we're probably more proud about that than we are the assets. And so we've actually done that. This is actually our roadmap, and some of you guys have seen it before. And really what this roadmap, where it originated from, was one of our fix and flip investors. His name is Raj Prasad. He was fixing and flipping houses. And what happened was, and we also have a fund, for our hard money business. Well, what Raj was doing, was, we printing something out over there? What's going on? Making some coffee? Someone needs to stay awake? All right. So what Raj did, though, Raj would find good deals to fix and flip. Well, he would come to us and use our hard money to lend to him. And so, we'd lend him 90, 100% of the deal. He would then fix and flip the house, execute on it, make about $40,000, $50,000. And then what Raj did is he said, hey guys, can I invest in your pooled mortgage fund? I want to take this $50,000 and I want to invest it and I want to make, passive income on my own. And what do we say? Yeah. Sure, yeah, sure. So Raj started fixed and flipped all these houses. And then he started investing in our pooled mortgage fund. And then we're like, oh my gosh, that makes a lot of sense. Raj has just helped us create the roadmap to wealth, where you go in, you find distressed assets, you fix and flip them or you wholesale them, you build your capital stack, you then take your capital stack and you invest it to make money for you. Now, the capital stack doesn't have to be invested in our pooled mortgage fund. The capital stack could be, okay, well, I want to get a residential rental portfolio. Lily, raise your hand. Where are you, Lily? That's what Lily does. Or it could be, I want to become a hard money lender myself. I don't know if any of you guys in this room are hard money lenders. Jim, I know you lend. Do you lend your own money too? Okay. All right, so Jim's also a hard money lender. All right, so do you want to become your own hard money lender? Do you want to invest in pooled mortgage scenarios? Do you want to invest in syndications? Do you want to invest in commercial assets? Do you want to be a tax lien certificate investor? So that's really basically at the end of our roadmap is how to teach you to not only create the capital stack, but to teach you how to invest it to make passive income. And that's really, at the end of the day, what y'all are trying to do. All right? This is who we are, Roadmap to Wealth. Book a call with us, monthly private call if you want to do the one-on-ones. We have group calls. We have a call Tuesdays at 1 o'clock that I run, Thursday nights at 7 o'clock. We have a community where we post deals. Matter of fact, our students get to see some of these deals tonight before they actually get posted to the public. What else am I missing, Curtis? 6 classes online. How to Find Distressed Assets is our bestseller. Real estate fundamentals, financial literacy in real estate, investing, how to fix and flip, how to wholesale, and then how to find the money to buy your investment properties. So we have all that stuff there. Here's a total accelerator program up to date. This is our students' profits, 1.666 million. That's an actual profit. That's not a net profit. So if you guys take out your calculators, which I kind of want you to do, and how many students do we have? I don't even know. 40? So divide 1.666500 divided by 40. That's the average profit per student. 40,000, right? About that. Thank you, BC. I need a numbers guy in this room.
You're a tough teacher.
So,
had 2 new students last week. Do they have to?
I hope they catch up. I hope they don't weigh us down. By not finding deal, I hope they don't weigh us down. But anyway, the reason I bring this up is because these are real numbers, guys. And all the deals that they've done are in the MLS. They're all public record. Keep that in mind. All right, roadmap to wealth. Should I wait for the market to go up or down before I get serious about real estate investing? What's the answer? No, right? And we're going to talk about the market here in a second. But guys, for us, what do I always preach to you guys? For us, this is the best time to invest. Anytime the market gets turbulent, whether it's on the commercial side, whether it's on the resi side, this is the time to invest because people are absolutely freaking out. They're weighing on the news. They're weighing on their emotions. Oh, inflation is so high. Oh, inventory in Virginia is picking up. Oh, I'm starting to see all this different stuff. So people scare you. This thing called recession. Well, we've probably been in a recession the last 6 to 9 months. We're not going to know it because they're not going to be honest with you guys in the news. Well, we think we've been in it for a long time. So for us, the more turbulent things get, the more there are deals for us. Okay, so keep that in mind. I'm not interested in fix and flips. I'm interested in buying and holding rental properties. Will this strategy of buying distressed assets work for me? Of course it does, right? Right? One of the things that we preach when you're building a rental portfolio, Lily, when you started buying your rental properties, did you buy them at market value? Right? You bought them at a percentage of the value and you kept them as rentals. Right? So that's exactly what we preach. We don't just buy to buy into a cash flow. Oh, I want a cash flow. I want a passive cash flow. No. What we try and teach folks to do is 2 things. Number 1, we want them to buy on the wealth side. We want them to buy into an equity position. And then number 2 is cash flow. Because at the end of the day, if you at least buy into wealth and the cash flow is neutralized, then at least you're going to be able to get a free market ride with that tenant. Right? How many rentals you got back there? 10? You got 6. How long is it taking you to build those 6? 2, 3 years? Right. Did you buy any rentals at market price? Not even close.
22 cents on the dollar was lowest.
Right, so that's 78 cents. Oh, that's right, Hamilton. Evansdale. That was 22 cents on the dollar. Oh, you can't get deals like that. Are you telling the truth? I thought you couldn't get deals like that. People told me you can't get deals like that. Congrats, that's a great deal. Yeah, seriously. 22 cents on the dollar. House was worth what? 420,000? 450 and you bought it for 120? And you kept it as a rental. That's how you build wealth, guys. She's lucky she got a cash flow out of it too. Huh? Yeah, how nice is it? Good for you. Congrats. All right. You're teaching your students how to find distressed assets. Does it mean that there will be a lot of competition making it hard to find deals myself? Right? It's a great question. It's a great question. Look to your left, look to your right. What do you see? That's your competition. That's your competition. Everybody in this room is competition. You guys are all my competitors. Do I give one SHI bleep about who my competition is? I've never, Carrie, do you care about who your competitors are? You can care. Jad? Do you care about your competitors? No, because one of the things that we teach our students is that we teach you guys how to separate yourself. Keith, Carrie, I want you guys doing the same things, but I want you to separate yourselves from each other. I want you to be friends, but you're complementary competitors. Our students are complementary competitors, but they're helping each other out. That to us is important. We want the help, right? You helped Ola. Was it Ola? No, you helped, with the list. So we have a lot of students helping each other out because that's what it's all about. We're helping each other to find deals, and we're not being greedy about it. All right, deal updates. Who was here last month? Curtis was here. You guys were all here last month? Good. About half the room. Welcome back. All right. 6723 Ben Franklin Road. That was a buy and hold that Richard Yoon presented. Not available anymore, off the market. 8427 Allentown Road. That was the development deal, Roberta, that we talked about. It's the 5 lots in Fort Washington, Maryland, that we're selling. We got the final site plan approved. We're paper plats, so that's ready to go at $975 or best offer. Contact me. That is still available. I don't really expect that to be sold in this forum. Maybe. I mean, this is a deal for a developer who knows what they're doing, especially in PG County. So nothing personal against you guys, but I don't really expect it to be sold in this forum. But if you have somebody who's a developer over there that might be interested in it, this is a good play.
Charlie,
Yes, sir.
can we know why the first one is off the market or unavailable?
No, that's Richard Yoon. Richard's not here, is he? Richard! Not here. Call Richard. 703-283-3743. Call him. I don't know. Remember, though, like Ed said, we don't vet the actual deals. We vet the ownership and the control of the deal. So in that particular case, Richard, I think, was trying to wholesale the deal, right? So I guess what that means is that the price might have been too high and he couldn't get enough money to wholesale it. That's my guess. But I just vet the control of the deal. Like on Allentown Road, we're not wholesaling it, we actually own it. 608 60th Avenue, that's another one for us. The problem with this deal is, and you guys have seen it once or twice, is that we are waiting on the plan approval from PG County. So it's not totally shovel ready yet. We thought it would be shovel ready between this month, last month, the month before, the month before, the month before, and then there was the month before, and then there was the month before. So we thought somebody would wake up and approve it because there's nothing else left for us to do but to approve it. Right?
Yeah, we hired a third-party permit processor for that. And that's as far as they got. Submitted but not approved.
Which, guys, we're going to cover this when we talk about the market status, and you're going to hear a tirade from me when we talk about the inventory word. With these government agencies who are terrible at approving projects. And people wonder why there's a housing shortage across the country. We're going to talk about that.
Well, and this is one of my favorite, one of my favorite warnings that I've seen a lot for years and years is people selling deals or properties or whatever and say, oh, this is great now, but wait till you add that 4th bedroom. Wait till you add the garage, garage with living space above it. And look, down the street they did it. There's one under construction down the street. Great, that's fabulous. But if you don't have the plans, that just changes the entire risk profile.
Right.
And it could be that they've, grandfathered in the next street over, but not your street. There's just and of course, PG County, our experience is their permitting is very slow. So even if you do ultimately get it, those are the kind of risks you want to look for.
All right. Next is the actual deal of the evening, actually. You guys see that? 44, 46, 48, 50 Q Street. It is a condo development approved for 9 units. 9 units, what's the average condo price over there? $900,000, $950,000?
Yeah.
It's about a $9 million out. The guy that's selling it is not us. He's reduced the price almost $1 million from last meetup. So if you guys know any developers in DC that are interested in this guy, it's in Northwest. It's in a very good location. It is shovel ready. As a matter of fact, we're working on the raise permit as we speak, right?
Yeah, yep. It's
Raise
shovel
permit.
ready effectively.
So if you
The
guys are
plans
interested
all
in 44,
approved.
46, 48, 50 Q Street, it's a phenomenal development deal. It's a church. Church took up 3 addresses, and then there's a 3-unit building next to the church. The 3-unit building is actually ready to go.
Yeah.
The church has to be raised. The construction on it, I haven't seen the numbers. What's the construction budget on it? Do you remember? 3.5, 4 million?
Yeah, I think they were going for very high-end ones at that point in the market, and I think stepping it down a little bit from where the market is right now, what's being built in the neighborhood.
You guys want to make some money if that's your game. It's a DC game.
What's Clear Sky's role in that?
We are the first lender on it, so we don't really have a role yet. We might have a role. Can I say that? Ed, can I say that?
Yeah.
You just did.
Yeah, we might have a big role in it. As a matter of fact, if I was a betting man, yeah, we'll probably have a big role in it, but it's okay. We're in there for about, what are we in there for, about $1.5 million?
Yes, yeah.
Yeah, we're in there for $1.5 million in first trust position. Now, if you guys had an asset, site plan approval, it's worth $3 million, and you're in there as a lender at $1.5 million, would you guys do that deal? You can say yes. Hell yeah, that's the answer. All right. This is another one, 11433 Valley Road. That price reduced from 2.2 to 2.1 million. What this is a 3 site plan approved for 3 houses. Each lot is an acre each. I guess I can say this, I'll say it. Yeah, I'll say it. I still think they might be slightly overpriced. The finished product would be something for evergreen homes. I think the out price of the homes is about 1.7 to 1.8 on the finished product. So maybe the number is 600,000 per lot. That's your number if you can get a 1.8. Usually the builders want to buy the dirt platted paper plats at 20%. So if it's 2 million, they'll pay 600,000 or 400,000. So it might be a little bit overpriced. 315 East Cold Spring Lane in Baltimore. It's right by Loyola University of Maryland.
Yeah.
It's literally a block down the
Hopkins,
street.
Loyola, 1 block.
It's 1 block. We own it. The problem is, guys, if you buy real estate and if you have access issues, it might be a problem. It might be a big problem. So, how long have we owned this? 2 months?
5
a month?
weeks, 5 weeks.
5
6
weeks. We're finally getting access to it on Friday.
Yeah.
Do you think you could sell a property where you have access issues? Especially in Baltimore and Washington, D.C.? Not really. So that's our issue there. So we'll have it by this Friday. They're still out there. Ola, I know you're interested. Joel, I know you're interested. We ain't forgot about you.
So the top one, how many lots was that again?
3 1-acre lots. Site plan approved, ready to go. Shovel ready. Just need to put whatever type of house you're putting on there and you're ready to go.
What's the ARV of this
$550?
Baltimore property?
5.25, 575?
All day.
All day? Yeah. It's in a great neighborhood. I'm not fans of Baltimore, but this is a great neighborhood.
Is it county or city?
City. It's literally a block away from the college. No, hell no. We don't. Oh, good question. He asked if it was ground lease. Ground rent. The answer for us is hell no. Am I allowed to say that?
Yeah, I think so.
I just
think
did.
you just did.
You can cure that at closing too. You don't have, if it's someone selling it with ground rent,
Yeah.
you can cure it.
We'll cure it and buy it fee simple. We don't want anything ground rent. We were looking at a property in PG County, Dodge. Your
Yeah,
favorite
that's-
building? Your favorite building?
Yeah.
On Dodge that somebody wanted us to loan against. It's a big old commercial building sitting there, vacant, shocker, Class B, Class C office building that's vacant. And we were looking at it, we were interested in it, and then it says this little term at the bottom, ground rent. It's like, oh, okay. What do we say next? We're out.
No. Yeah.
That's right, no.
Nice.
Good question. Did you not know what that meant?
It's standard.
Then why didn't you ask the question?
Waiting for you to finish your sentence.
Ground rent, what that means. The land is owned by somebody else and they're receiving rents, hence the term ground rent. You as the owner only own the physical structure. That's a big problem, right? There's a famous condo complex in
Arlington.
Arlington that sits on ground rent. What's the name of it? River?
Yeah. River Place or something like that.
Y'all familiar with that? Do y'all know that's ground rent? Do y'all know when the ground rent is up? You got it. You think that's a good investment to buy a condo over there? I wouldn't. Wouldn't touch it. So remember that. That's very important that we know that. Ground rent versus fee simple.
Not all lenders will do that, also, ground rent. I do a lot in Baltimore, and we get the original lease from 100 years ago, and it's handwritten, and you have to get an attorney to okay it, and then it has to go indefinitely, but these are little things, if it re-ups in 5 years, and some lenders won't do it, it is complicated. I mean, I do them all day long, but it took me a long
You definitely want to buy fee simple.
It
All
took
right.
me a long
Yeah.
time to, figure out how to do this, but if you want to do it from ground rent to fee simple, it probably takes 2 or 3 months.
Yeah, you want to do it, for sure. All right? Okay, that's that. 4024 A Street, that was a Harry Gulp deal. That's not available. I don't know what happened to it, because I got a lot of calls on that particular deal, and I think Harry just went to sleep on us. Shocker. 2115 Acquire Drive. Did Brandon show up? Brandon's not here, is he? Brandon's not here? All right. Gary, I think you guys bought this one, right? 2115 Acquire Drive. I'll cover that a little bit more in detail when we talk about success stories. Hopefully you guys might have some. And that's it for the deal updates from last month. All right. Upcoming events. I've got a couple of upcoming events. If you guys are interested in the X's and O's of the hard money business and you want to see me in less than 12 hours, you can see me again in 12 hours. I'm doing a presentation called the X's and O's of hard money lending to a commercial industrial land exchange. That's more of a another commercial meetup. I'm doing that tomorrow at my favorite place, the Jukebox Diner. I got to admit, I've never done a presentation in a Jukebox Diner. Have you?
No. Where is the location of the jukebox?
Sudley Road.
Oh, okay.
Jukebox Diner. Mm-hmm. So if you guys want to come and hang out at the Jukebox Diner, I'm doing a presentation on that. More exciting, though, actually, believe it or not, I'm going to be in Richmond on Sunday at 3 o'clock. So if you guys are bored, the Investor's Edge Smart Strategy for Building Generational Wealth. I'm going to do a new presentation that I tell you I'm really excited about called The Perfect Real Estate Investing Business Model. We've had this presentation around for a while. And so this group called me up, and they want somebody to come talk about how to help people build generational wealth in real estate investing. And I said to them, I said, you know what? Thanks for calling. I've got the perfect presentation. So they don't realize it yet, but they're going to be my guinea pigs. So that's on Sunday if you guys want to go down there. If you guys know a place called Short Pump?
Yeah.
Short Pump? Mm-hmm. It's going to be in Short Pump. Nice area. So hopefully I'll come back alive. All right. Anybody have a success story from last month that they want to present? Spotlight? Anything? Any deals? Chad, you do any deals? That's the issue, man. It's like I feel like I'm at Traction or Cap Cities. All right, I'll start. One of my students' name is Brandon. We got a deal under contract on Aquia Drive. You guys know where Aquia Harbor is? So we got a deal. It was a pre-foreclosure deal. Oh my gosh, it had all of the distress assets to it. It was a pre-foreclosure deal, so it had a financial distress. The guy was a hoarder, right? Conditional. And also, too, the guy happened to have one of the D words, one of our favorite D words, divorce. So we had to deal with him and an ex-wife. We had to deal with a bad condition house. And so Brandon decided once we got it under contract, 'cause we had to deal, I don't know if you know this, but we had to deal with an ex-wife, and Brandon was able to wholesale it to Mr. Gary. So that was good. So can I tell the numbers? You don't care, do you? That's a great question. How do we find it? I don't even know. I forgot. No, pre-foreclosure. So there was a substitute trustee ad. One of the things I do is I got my students identifying pre-foreclosures and how to evaluate them. It was a good pre-foreclosure candidate. He got on his dialer, started dialing, and the ex-husband who happened to be, he was a cyber engineer. I don't know how cyber engineers get unemployed, but he was unemployed, a cyber engineer. How does that happen? I don't know. When you see the condition of the house, I guess you know. He had some Filipino girlfriends. That's really what happened. I'm serious. Yeah, you guys are laughing. I told you I'd keep you entertained. I told you I'd keep you entertained. He had Filipino girlfriends. That's why he's divorced. Conditional distress. Okay, anyway. So we found it as a pre-foreclosure. Brandon called him, guy answered the phone, said, come and meet. I'm coming back from Williamsburg when I'm doing the keynote speak at Marima on our annual meeting. It's a Sunday. I meet with Brandon in the guy's living room. Didn't want to sit down, but I did anyway. It's one of those couches.
Yeah.
The love couch.
Yeah.
We've sat down many times on the love couch. Woo! My gosh. So Brandon got it under contract for about 210. Gary, you bought it for 242.5, something like that? 252.5. So Brandon made a wholesale fee of about 42.5. Wow. Right. That's a success story. Here it gets better though. You're in there at 250. What's the out price? 450, 475? 425. He'll put 100 into it, so he'll make 60, 70 grand too. Right? There you go. Good. So don't beat me up. Anyone else? No? All right. Market conditions. A lot of times what we like to do is we'll do a very interactive event, and I'll try and keep it maybe 10, 15 minutes, because we got to cover the other thing. And we want to talk about what's on your minds as far as the market's concerned. And we could focus on the commercial space, but I think what we'll do at first is we'll focus on the residential space. And so we'll talk about the present market, Ed, Sam, the present market, and then let's talk about what we think is going to happen in the future. So who wants to go first?
Do you have your turban on tonight for the?
So in the present market, I think if you just look at it by jurisdiction, it's worth breaking it down and thinking about. People have seen the slowdown in Northern Virginia. I think anyone who's been looking for houses or selling houses has noticed that. But it started way before that, 18 months ago in the district, maybe even 2 years ago. And now the district is a transformed space. There are properties, and I know it quite well because we have a number of them coming on the market. There are properties listed that there's no possibility you could construct them for the cost that you could buy them for now. And then there's nothing in the pipeline. If you look at the permits that are being processed, no one has bought anything to replace the inventory with new product coming on because people have been scared. DOB is hard to deal with. The people that are selling assets haven't retreated from their old ideas of price. So I think the spring is going to soak up all the inventory that's there, and there's going to be a little bit of upward price pressure, but I think the market's going to move very nicely in the springtime. People have been apprehensive about the government shutdown, which they're going to be paid for, and people are experiencing a little lower interest rates. They've adjusted to the higher environment that we're in now, which is really not high historically, and I think there's essentially going to be a lot of absolute demand for housing because people have not been turning housing product in the city, and then there is no new inventory, and it is so expensive to construct inventory now. Maurice will tell you, we've been looking at materials, and Giovanni, I mean, it's like 30% more expensive for a lot of your materials than it was 3 years ago. Now that's a huge number if you're having to do like a $500,000 renovation on a house. So anyhow, my view is that there's going to be more demand in the springtime than there is supply, and it's going to go up, and that'll start in the district and head outward to Virginia, and Prince George's will probably be on the last leg of the recovery because there is still a lot of inventory in Prince George's. Prices are very much suppressed, and people at a lower income level in that county are the most impacted by adverse financial conditions in the general market. So I think that's the last recovery area, but I think it'll be looking more attractive in the spring for Virginia and DC. That's my view. What do you think?
Yeah, I'm usually the prince of darkness when it comes to the future, and you're always right at some point with that standpoint. But I tend to agree with Sam, and I think the key things that Sam talked about really I view as psychology and herd mentality. And so, we've talked before about the as hard as they were for the people involved, the firings in D.C. of government workers were not objectively that large in terms of numbers, but they had a psychological effect. And the furlough was both psychological and real. I think people really, and then of course the fear level on top of that. So I think it really depends which way the herd is going to point. And so the relaxation of the furlough and some of these other factors should pull it out. And the reality as well is I think people do have to get used to the pricing and the affordability issue, and that's a real problem. Like you said, we always look at it, the prices objectively are not that bad if you think of it in terms of replacement cost. Like a lot of times the house that somebody's buying even today at the reduced price it's way under replacement cost. Forget the land. And so, but that doesn't mean people have the money to pay for it. But I think there's a pent up demand of people to buy houses. It's not like you can really wait for them to go down very much because that replacement cost issue is going to keep the existing inventory cost up. There's still the lock-in effect with older people trying to age in place much more than was 10 years ago, 20 years ago. And of course, the interest rate lock-in effect. It would take probably a few more points. We were around 6 to 7 now. Even if it went down to 5.5, would that knock people out who are at a 2.5 or 3.5 interest rate? Maybe as it starts to get closer and people have a lot of reasons they have to move. And I do think it's going to go in reverse order. Like DC was the first to have problems. It has the biggest hit of those psychological issues that have been addressed. And so because of the moderating prices, that will make people pay attention. And one of the things I like to look at, I know you guys look at the sub-market, I tend to look at some of the macro stuff, is I like to, on Zillow and Redfin, I like to just through that, because that's what a lot of people look at, just look at price drops. And for a while there were just constant price drops in DC, and you don't see that as often. Now, and there was never a price drop in Northern Virginia, and all of a sudden, Burke, where I live, Fairfax, everywhere, there's a lot of price pressure. And so I think that will come back a little slower potentially, but it's still not bad. And ultimately, the key is, I think, goes back to what Charlie said, and what we talk about a lot, is people need a place to live. And there's always deals to be made. There's always people who will be in the right position to buy. It's just sort of finding them and connecting with them. And if you can get a distressed property, taking into account the inflation adjusted cost to fix it, and get it at the best part of the market, it's going to sell. So if you're, like we do, my stuff I find tends to be a lot of entry level stuff. And I love entry level stuff, even though entry level people have the hardest time. But if you're at the very lowest end with a good product, it absolutely will sell. Somebody at the entry level has been waiting. There's some programs in DC, HPAP, they've got some money back to support some lower income buyers. So that's good. Rich people always have money on the high level. The highest end. It's really what's now the middle, I guess in Virginia is like 800,000 to $1 million. That's where you have a lot of issues, and I'm curious to see what happens. But again, where's the inventory? It's not like people are building a ton of it. There's no land. In Fairfax, there's virtually no land, and you have to go out to Loudoun, and there's not a lot of building going on out there as far as I'm aware. Anyway, long way of saying, although I guess my dooming from a year ago was pretty good, but I'm a little less doom focused this time. I think.
Well, no, I think that's good. And so I got to bring up a text that I received, I think a week ago. Joel, where you at? Joel, raise your hand. Joel, right here. Joel, was it a text or a phone call? I don't remember, an email. So Joel sends me a text and he goes, Charlie, what's going on with the market? Do you think it's going to crash? Right? Isn't that what you asked? Do you think?
I sent you a picture of something I saw.
Right. Do you think it's going to crash? Guys, the answer is unequivocally no. Because if you guys remember, who was part of the 2007, 2008, 2009 crisis? Raise your hand. All of us older guys, right? We were all part of that.
Oh, yeah.
Do you guys remember what happened at the end of that crisis? Who were the buyers of real estate? Probably 60, 70% of the buyers. They were cash buyers. They were cash buyers. Most of those cash buyers are still sitting on those properties to this day. So your foundational level is already there, right? The reason why people had to sell in 7, 8, and 9, we saw it July 2007, we saw the market hit, and then maybe it was 8. The reason why those people had to sell was because they had mortgages that they should have never got. The subprime market. You ever heard the Nina loans? No income, no asset qualification. You still love them, right? We all loved them. We all made money. But these people had no business buying homes. So at the end of the day, they shouldn't have owned homes anyway. Fast forward it. The credit restrictions got really, really tight. And the people that can afford to buy homes had good credit scores, they had good income, they were your Fannie Mae, Freddie Mac buyers, right? They were more conventional conforming loans. So they were the ones who were able to sell the house. So you're not going to have a foreclosure crisis. We're not going to have a glut of inventory that immediately hits the market. If it ever comes down, it's going to be a gradual decline. Kind of like we're seeing in Northern Virginia. We're seeing some price pressure. We're seeing a gradual decline. But once the gradual decline comes, then there's a buyer pool for that gradual decline. So the answer to your question is no. We're not going to see it. All right.
And let me just add about that. The foreclosure crisis as well, there was a huge uptick in building. Yep. Which then had to get soaked up by the terrible lending standards. And the reaction after that was everybody stopped building. And I can't tell you the number of charts I've seen about how badly the home supply, that all got soaked up, but the home supply has not kept up with population and household development. So that's really changed, as well as then the pressure of interest rate lock-in and people staying in houses and everything else. So I do think there could be, if there's enough of a recession where enough people lose their jobs, it'll be bad, but it would be hard to be anywhere close to 07.
But do you think we're in a recession right now?
Oh, yeah, absolutely.
Yeah, totally.
And again, like you always talk about, it's very location specific.
Yep.
You know, even in the midst of a heavy recession, they're going to be great places to sell in D.C., to buy and sell.
See, I'm seeing the foreclosures all the time.
Right.
Especially on L Street corridor, the lobbying, the lawyers, all those buildings.
Yep.
Those older buildings are getting foreclosed on. I send them to you guys once a week.
Yeah.
Yeah, all right.
Ones.
You got a question?
Commercial mortgage-backed securities, I think they're like at a 10% delinquency. It's like an all-time high. Do you think that could?
And I think that's a lie. I think it's higher. You laugh. Where are you? Him? Muhammad? Can I say something, Muhammad? Community banks are not lending money right now. Wake up. Do you know why? Because they're holding on to these bad Class B, Class C office space loans that they refuse to write down. So I think your delinquency is a little bit higher than 10%. That's the reported. Again, we don't believe everything we read. I think it's higher than 10%. They refuse, the community banks, I'm not picking on you, they refuse to write down these assets because they have to raise more capital. They don't want to get into the FDIC sites. So I think that delinquency number is lower.
And that's actually a good point. So what I was talking about, we were talking about is residential. The commercial problem is not dissimilar from 2007, where essentially things got overbuilt. Why? Because of the change with like Amazon. And the actual use of office space fundamentally changed. So it ended up through essentially nobody's fault being overbuilt, and then not being able to deal with a recession on top of it.
And there's product in the commercial space that no one has any idea what to do with anymore.
Right.
And there's no like transformative, I'll make it into housing. Aside from, I mean, you'd have to get approved for a zoning change. The buildings aren't usable again. There just can't be repurposed. Some old commercial building doesn't become a quality housing development someone wants to live in. So there's a whole world of commercial, I think, out there that's problematic. I was just speaking earlier about the residential world.
What happened to all those loans that are coming to commercial?
There you go.
5-year loans. I haven't read anything.
You're not gonna. They're kicking the can. They're kicking the can. The banks are extending all these loans a year. Yeah, because they're not even getting new appraisals on the loans because they know if they get a new appraisal and they don't extend it a year, they're going to have to write it down. And they refuse to do that. So they're allowing their borrowers to just keep the same interest rate, kick the can, hoping the economy is going to bail them out. Let me tell you something. They're not going to get bailed out by the economy.
And then when they have vacancies, then they can't replace the people
Right.
at the same rates.
That's right.
If they replace them at a market rate, let's say that you rented your space for $40 a square foot,
Right.
but now in the new world, it's worth $8. Then
Right.
they go out at $8, they could
Yep.
find tenants, but then all their loans are called because you can't cover your note with an $8 square foot.
Right.
When it's a
So
$40
let's-
space. So people are frozen.
Yep, they're frozen.
Or companies are frozen.
Banks are frozen. Commercial investors are
investors are
frozen.
It's similar for multifamily too.
Yes,
There's some of that.
very similar
Yeah,
for
in the city, the
multifamily.
multifamily stuff is.
Because these
is
guys
a
were
terrible
buying
mess.
these syndication deals when interest rates were 3.5%, 4%.
So now they have
And
to
then-
relock.
Right.
And then
Right.
they can't sustain it
Yes.
with their rents. It's just
That's
like
right.
all these commercial activities are
That's
really endangered.
Yeah, and we don't do the multifamily stuff, but I think there's a lot of headroom there for people who have cash and are willing to wait it out. I think that multifamily in DC is going to do pretty well because it's been absolutely decimated.
It has been. Yep.
Yeah.
I'm seeing multifamily deals left and right coming my way. All right, so
If you don't mind, I was just gonna chime in with regards to the current labor market.
The labor market, so like that feeds into like even the residential work.
Right.
In the district, you can't get as much labor as you could previously before all this ICE enforcement. That changes people's ability. So you're going to have a lot more expensive labor. You're going to have, people with legal status. It's much more expensive and not as available. So again, another block to developing and to doing anything, driving up costs tremendously.
So I'm sorry, to be clear, I was talking more about like professional labor market, as in like unemployment,
Yeah.
as in like, you got small businesses, and I actually work for the SBA, but small businesses, 34 million small businesses out there, right? Dealing with AI, they're dealing with just a shortage of labor, right? And less tariffs coming in. You're dealing with large businesses, the Metas, the Googles, Facebooks, and financial services that are starting to lay off, have been laying off, will continue to lay off. And so with all of that said, and thinking about the next, 6-9 months, really is what I'm wondering is that, like this slight uptick or even not falling down as much, is the labor market not as big of a concern?
I don't think it's as big a concern in this region as maybe in other regions where they're very focused on a big meta office in New Jersey or something. This region can absorb a lot of unemployment before there are rolling impacts through the housing market.
Oh, yeah.
And 20 years ago, the standard comment was the DMV is recession-proof because of the number of government jobs and military contractors. I think that's a little less true given what's going on now. I think that's more of a midterm problem. In other words, I don't think we'll see that fully hit by, say, the spring. But it is an interesting question a few years down the road. It could be significant. I know one thing. If they are successfully able to cut off immigration, the U.S. population is supposed to peak in 2030, but for immigration. So if the population peaks, then there's not going to be a need for as much housing anymore. Yeah. So I don't think that's going to happen, but there's all these factors I think are a little bit more medium to long term.
Well, I think that's good because that puts us into the future. How do we, as investors, evaluate the market? We evaluate with the 3 I's. Interest rates, right? That's what drives the real estate market. Inflation, right? So as inflation is going to keep going up, if it kicks us into what we think is a recession, they're going to have to drop rates even more to kind of circumvent that. And then the third thing that we look at is inventory levels. We still don't see high inventory yet, not from a historical standpoint. maybe for the last few years, we're starting to see a little bit more inventory, but you got to keep your eye on the inventory. So the other way we evaluate things is we evaluate, especially on the resi side, at what's called the subdevelopment level. So each particular subdivision is its own marketplace. We don't look at macro views, we look at subdevelopment views, which is at the micro level. So if there's a lot of inventory, solds, no contracts, that's a subdevelopment going down. If there's actives, contracts, a lot of contracts and some solds, well, that's a neutral subdevelopment. But if there's no inventory, just a bunch of under contracts and a bunch of solds, that's a subdevelopment that's still going up. So it's all at the subdevelopment level, and you've got to be able to analyze it at the most granular level. Because we're not in a macro marketplace, we're in a micro marketplace.
Although the last macro thing I'll mention,
Yeah.
which could really skew towards the upside, I'd say it's about, because I am a recovering lawyer, I'd say it's about 60-40 that the Supreme Court strikes the tariffs. And that, what people don't realize, that will be such a large tax cut that it will be a huge boost to the economy. I mean, people like us, it'll lower our rebuild costs enormously, and that could have a very big impact in the spring if that happens. Tax cuts are always stimulative.
And finally, if you go back to the macro, because I know you want to wind it up at about 8, if you go back to the macro and you think about asset prices and commodities prices and the growth in them and all the drivers that are going on globally for that, that just increases these housing costs. So if you look at our model and you sense that there's like a push to more European models of a lot of renters, and you're finding consolidated owners, fewer owners, many more renters. The owners have very expensive assets in Europe that are rented. They don't have great cash flows, but they're using it to shelter and pass on to their family members. In our country, would be a stepped-up basis and whatnot. So I think if you're moving in that direction at the highest macro level, I think asset prices are increasing over time, and housing is at the center of it over like a 20-year time frame.
Yeah.
All right, we're good, right? I think we probably need to move on. You got a question, quick? All right, one more.
Yeah, exactly. Exactly.
I'm wondering how that affects what we're trying to do here.
50-year mortgage.
Oh, jeez.
Which
saw-
is basically locked-in rent.
That's what it is.
Because you're 42 when you get it, and you're 92 when you pay it off.
Yeah, I saw an example. $500,000 mortgage at a certain percentage rate was about $2,500 for 30-year, and was about almost $2,200 for 50 years.
Well, the
So it's
question.
almost the same.
Well, no, the question should be, and this is for you guys. Are you guys offering 50-year mortgages yet?
No, I don't think.
No.
The interest rate risk is too big.
You
Nobody
offering
would ever
40?
do that.
You offering 40? Some lenders are. Yeah, 40.
But what's the interest rate compared to a 30? It must be
A little higher.
big difference. Yeah.
A lot higher. Gives you more leverage.
Or have a reset.
I mean, the 50-year mortgage is just going to make the market a little bit more affordable for these higher dollar houses, and it's going to push prices up even higher.
If it works.
Actually, did a 50-year mortgage, so the DSCR is, our ratio.
Right. But they're not offering 50-year DSCR stuff, are they?
Yeah, I've got one.
Oh, that's pretty good, guys. Huh? Yeah, right. Okay.
But they're not securitizing them yet.
Right.
This proposal would be like a
Well, the
conventional-
DSCR market's a bunch of insurance companies anyway.
Yeah.
All right. Chris, come on up.
Well, especially-
We got here. We finally got here. It's been, what, 2 meetups now? 2 meetups. This is our 3rd meetup. You mic'd up, right? Can y'all hear him?
Can you hear me? Okay, cool.
Yeah, good to go. Okay.
All right, let's do this.
Chris, introduce yourself. Who are you? What do you do?
Guys,
Could be.
I'm a realtor investor in Northern
Buy
Virginia.
and sell it.
I've been doing real estate for about 4 years.
He is mic'd. Supposed to
Mike,
be.
but it's not working. Is it working now?
Now it's working.
All right.
Got it.
I'm
right.
Chris Urick. I'm with. I'm a real estate agent and investor in Northern Virginia. Been doing real estate for about 4 years. I met Charlie about 2 years ago through Harold, one of your other students.
He was supposed to be here tonight, by the way.
Was he? Okay, it's all good.
Met him through Harold.
Did a couple deals with him on the lending side before I joined as a student, but now I'm a student now. So
All right, let's talk about how we stopped the foreclosure in less than 24 hours. I've got the property up there. Why don't you talk about the property, talk about how you found it, talk about the wholesale experience, talk about the owner experience, and just kind of where you are now. Let's talk about
Okay.
the property.
Gotcha. So I met this lady at a Starbucks one day. She overheard me talking on the phone about a deal. So she said, "Hey, are you an investor?" I said, "Yes, ma'am." She said, "Well, I'm a wholesaler." And then we kind of kept in touch. And then one day she called me. She said, "Hey, I got this deal. It's a Manassas address, but it's on the Clifton side of Manassas. The auction's tomorrow. Can you meet the owner at 6 p.m.?" I said, "Absolutely, I'm on my way." I sent the address to Charlie. I sent the address to Harold, who's my contractor that I use for all my deals. And Charlie did his thing. Harold met me at the property. We met the owners. So, crazy story. The owner was Washington Redskin Hall of Fame legend. He's actually the first African American to play for the Washington Redskins back in the day. What happened was, unfortunately, he passed away 2020. His wife took over. Her and her daughter got into a situation. I don't know if I should go into that on camera. Long story short.
But she lived in D.C.
She lived in D.C. The house was vacant. It was full of furniture, but nobody was living there. Nobody was using it.
So at this point in time, we've got two of our distress assets. We've got a financial distress, foreclosure.
Right.
And then we also have a vacant house, a conditional distress.
Correct. Yeah. No, one property, but
No. So when we talk about distress assets, we look at four different categories of distress. We look at financial distress. We look at conditional distress. We look at family distress, which is death and divorce. And we look at emotional distress. So this happened to have two out of those four categories. It's a pre-foreclosure, financial, and the house was vacant. And as he's going to tell you, it needed about $5,000 of work.
I wish. No, not even close.
More than that?
Way more than that.
How much?
Closer to 250.
250?
Yeah, closer to 250. Yeah,
Okay, 200. I'm sorry. I missed.
He missed the 2 and a couple zeros.
I missed the two of the. Yeah. Happens.
So where was I? So long story short, the wholesaler had a number. She was at 850, and we were closer to 7. So we started at 7. She was at 750, and then we actually got it for 710. So we lowballed it, not knowing what. I mean, I'll be honest. I didn't really know what I had at the time until after I bought it. I was looking at like a 1.3 ARV, which turned out to be closer to a 1.5. And then we had a recent sale.
So let's describe the house a little bit.
Yes.
So
Describe the house.
there you go. I'll cheat a little bit.
Yeah, about 6,000 square feet. It's got 3 beds upstairs. There's actually a 4th bedroom in the basement. 3 full baths, 1 half. 4 fireplaces down to 3 because we covered the one in the master.
You remove one.
Yeah,
Okay.
we removed one. It was just unnecessary. On
5
5 acres,
acres, yep.
and on the water too. So beautiful waterfront view. Built in 98. Tax assessed value is about 1.1 million. And original ARV was 1.3, but now we're at 1.550.
That's about right?
Yeah, I think I'm going in at 1.5.
You're going at 1.5?
Yeah.
Okay. There are the pictures.
Yeah, beautiful
Obviously,
house.
this is before, right?
This is before. Yeah, it's completely gutted now. We're going through a couple permits right now, just waiting. But once the permits are approved, we'll be able to start putting finishes in there. Yeah. So, believe it or not, the neighbor 2 streets over on the water, a little bit smaller than mine, just closed in October for $1,865,000. So
Right.
So I really don't know where I'm at.
That's
I
right.
might even
So-
be more than 1.5.
Right. So the problem is with these, we call them eclectic assets. They're very hard to price, as you realtors probably know, right? It's on the water. It's 5 acres on the water. They don't make that anymore. So it's not totally a square footage play, and so it's very hard to price it. And so I have 730. Did you call me at 6? I don't remember. So.
No, I got the call at 6.
And you called me at
then
7:30.
Probably about 7:30, yep.
And so what happened was, it was on August the 20th, 7:30 calls. You met him around 8:30 is what I got. But you met the owner and the wholesaler.
Owner, wholesaler, and contractor, all at once.
Right. And so at the time, we didn't know that there was a wholesaler involved, or at least I didn't.
I did, but
You did.
didn't. Yeah.
So then what I did for you, and I'll show you guys here in a second, is I did a title search for him because before I have these guys make offers on properties, we want to know the total encumbrances on the property. Now, we knew it was going to get foreclosed on the next day, the 21st, because there was an auction set for 4/15 at the Prince William County Courthouse steps, and we'll get into that in a minute. So then what happened was I sent Chris the title search. The title search, I'm going to show you in a second, had very, very little encumbrances. So I'm like, Chris, man, you got to negotiate this really, really low. Don't go that high. Don't go that high. Pull that back. And since you got a wholesaler involved, don't give them all the money. Keep some of that money on your own. So he was negotiating with both the wholesaler and the owner, and so we got him to come down to a manageable price because we were thinking the ARV was 1.2. 1.25 is where we were at. Yeah, knowing it needed at least 200,000 in reno. So then what happened was, at 10:30 at night, the student wholesaler came to an agreement. I don't think she actually executed the contract till the next morning because she, the wholesaler, was frantically driving around DC, getting that contract signed. That day around 2:30, it's not in here, I got a speeding ticket because I was on the phone with these guys because I didn't have the damn contract yet. I couldn't get the auction canceled. So finally, we get the contract canceled. I knew who the auction person was. So on LinkedIn, Brian Thomas was his name, Atlantic Law Group, Orland. So I reached out to Brian and said, Brian, who are your attorneys at Atlantic Law Group that can cancel this auction for us? We have the contract. We got to get this auction canceled. So we did a three-pronged approach to get the auction canceled. I talked to the wholesaler at 11:30. You guys agreed to it at 10. We finally received the contract, but technically we thought it was too late to bring the loan current or to close. If I was in direct contract with the owner, I probably would have given the loan to bring it current to give him more time to close. So we had to do a three-pronged approach. What's her name, Ari?
Ari, yep.
Ari, the wholesaler, had Mrs. Mitchell in the car with her. She shows up to Alexandria City Bankruptcy Court about 3:30. Court closes at 4. Has the lady, I didn't know at the time, the lawyers have the contract and the wholesale agreement, right? She's at bankruptcy court filing a Chapter 13. I am rushing to the auction for a 4:15 auction. I've got the contract on my phone, and I'm going to show it to the auctioneer at 4 o'clock to get this auction canceled. Finally, I show up to the auction at 4 o'clock. Everybody's walking away, and they tell me, hey, Charlie, auction's canceled. Oh.
4:08 p.m., I get the text, auction canceled. I was like, yes, crazy.
Now, well, hold on.
It's like I felt
Now,
like hitting the jackpot.
here's the problem. Here's the actual ad, because I knew you were going to ask the question, how you found it. Here's the actual ad that depicted the foreclosure sale. Foreclosing trust was $376. We knew the house was worth over $1 million, so that was a good foreclosure candidate. But one of the things we couldn't figure out is why is a loan that was originated in 1996 being foreclosed on? I mean, the loan balance couldn't have been but $150,000, right? We're like, okay, this kind of is weird. No, August 21st was the auction date. The substitute trustee was Orland's Law Group. Luckily, because we've been doing this business so long, I had some point of contacts that we helped get that auction canceled. Now, there's 3 reasons why the auction could have been canceled, but we weren't sure which reason was the reason. Number 1, the bankruptcy filing, which, oh, by the way, wasn't the reason why the auction was canceled. That would have been our fallback. Number 2 was, did they get the contracts in time to cancel the auction? Number 3, did she bring it current? Or number 4, did they just cancel the auction? We were never sure why that auction got canceled. We just were glad that it got canceled.
Right.
Okay, now, here's the actual title search itself. At the top is the owner. Former Redskin, guys, this is very sad. Hall of Famer, Bobby Mitchell. Had a bunch of paraphernalia still in that house.
Yes.
CTE, he died, okay? She was living in D.C. with her daughter. She didn't want to live in this house for whatever reasons. She had emotional distress. There's a key terminology here, though. If you look under doc type, it was a very simple title search. A deed, a trust, an appointment of a substitute trustee. So what she had on there, they had two loans. They had the original loan that was foreclosing of $376 back in 1996. She had a M&T second trust of $200,000. This was a very simple title search. So we knew that by offering whatever you offered, 725, 700, 710?
17.
We knew 710 was not only going to clear up the title, but it was also going to give Mrs. Mitchell enough money to walk, and she was pretty happy about it. And it was also going to give the wholesaler their wholesale fee, which I don't remember what it was. I think it was kind of high.
It's high. We don't even got to talk about that.
It was high.
It was high.
It was
It was
high.
high. But here's the thing. I named my price. He told me he was at 737. So I started at 700, and we got it for 710. So we named our price,
Yeah.
and the wholesaler did their thing, and they went back. Like you said, she got her contract signed the next day. So she went and got her wholesale fee on her own. So that was good for her.
Right. And so this is the story of how we got that foreclosure canceled. I say less than 24 hours, but it was actually less than 18 hours.
Yeah, actually, yeah.
Frantic. I mean, we were frantic that day. I don't know if you remember. Sam, I was absolutely frantic. No, you missed that part. The wholesaler literally picked her up in D.C., took her to Alexandria City, the federal bankruptcy court, and had her file a chapter 13 on her own. You got it. We had to go there and file it. Can I refer this to you in the future, please? Can you raise your hand, please? Because I think Ed's tired of this bullshit, right?
Well,
I'm actually looking for somebody.
You're on board.
Normally you file it online.
350.
And for her to do chapter 13, if she was smart, if the thing got canceled, she should just put it back on the market.
That's the problem. We didn't know the auction got canceled until 4 o'clock. That was the problem. It was too late. As a matter of fact, she shows up at the courthouse at 3:30. I wasn't for sure that she even filed a bankruptcy because I was showing up with the cashier check in hand and the contracts in hand, the purchase contract from Mrs. Mitchell and the assignment contract, and I was going to show it to him and say, hold on, you need to cancel the sale. We got a bona fide offer here. So I was doing that. But if it did go to auction, I was ready to bid. I was going to bid because I knew Chris had it under contract, and it was like, I'd better just bid just in case. But there were a lot of other bidders there. I doubt I would have got it at his 710 price, but I was there to bid as well. But more importantly, though, I needed to make sure that auction got canceled, and it did. Now, what are the reasons to cancel a foreclosure in general? Number one, bring the loan current, right? We would have done that, but because we were dealing with the wholesaler and the timeline was too tight, as a hard money company, we didn't have enough time to do it. Number two, sell the property to a third-party person. Well, third party's right here, he's under contract. So a lot of law firms will take that under contract as long as the closing date is fairly quick like ours was. They would take that as the reason to cancel. And oh, by the way, the reason why that auction was canceled was because the wholesaler did email the package to the Atlantic Law Group lawyers, and they're the ones that canceled it before the bankruptcy was filed.
Nice.
So I confirmed that. Forbearance is another reason why you get these auctions canceled. Loan modification, bankruptcy filing, use a purchase contract or a listing agreement for you realtors, get the sale canceled, and then first-time auction. A lot of times, if it's a first-time auction, then you can ask the substitute trustee for a one-time hardship exclusion, and they might give it to you and be nice. Those are the way.
Do they usually, the foreclosing attorneys, they usually check with the lenders? Because anytime I've got one under contract, they're like, we gotta call the lender, and the lender has to approve, and
But remember though, who are you really calling first? It's not the investor or the lender, it's the servicer. So you got to jump through the servicer hoop. Then the servicer has got to call and get confirmation from their investor to get this thing to be canceled. But you're right, yes. And so we had the law firm who had the point of contact with the servicer get on the line and get that auction canceled.
Charlie, what title company did you use to get done so quickly to run the title?
Titan.
Titan Title. Titan Title, Lake Ridge, Woodbridge, Fairfax. But Scott's here. Scott, Is Scott still here? Scott left. I was going to ask Scott. We like investor-friendly title companies who can pull the title in less than 24 hours, get us back an abstract, and tell us what to do. Now, the problem is that this happened at 8:30 at night, 8:45 at night. We didn't have time for some title company to pull us an abstract. They weren't going to do it. So I had to do it. Luckily, I know kind of what I'm doing. And so I got this thing done. And thank God it only had a few different things show up on the title, so it wasn't that much of a title search. So.
You want to really live on the edge? I wired money in for a house, and it was sold at the auction, and it got my money before the auction was sold, and I still was able to buy it, and I was still able to buy the. Doesn't work. Yeah, and I still bought it, and then if they did it, they could have sent it back to the original homeowner, and I would have lost the money that I wired in. So you haven't lived on the edge until you've done that, Charlie. You know what I mean? Just wire it into the bank and say, listen, it's in before the auction. I own this house. So, and they could say F you and we don't get it back in time, and they just give that money back to the homeowner. Homeowner gets the check, and she's gone.
Oh my God.
Yeah, well, I've got a good story, a couple stories
but if
where.
it goes well.
Yeah, we've actually purchased properties in less than a week. He'll tell you, Sam. We purchased properties in a week or less without even having a sales contract. We had an agreement, but we didn't have an actual sales contract. We just called title company, say, we're buying a house such and such. This is the price. This is us. This is the seller. We're going to close it in 4 or 5 days. Let's get it done. Twice, right?
Yeah.
Yep. So we've done that.
Microphone or not, because I'm not that good on screaming. So why you guys didn't go directly to the bankruptcy court instead of running like crazy? That's my question.
We did. That was our third option.
Because it's an immediate stay, right? So it wasn't that better to take the lady 9 a.m.
Remember,
and then go with your...
No, but what you have to understand is because there was a wholesaler involved, we were not direct to the owner.
Oh, God.
We had that wholesaler in our way.
Yeah.
And that wholesaler did make a lot of money. Congratulations, but they were in our way. And so
that's why. Yeah, it makes sense. Correct.
And it would have been a skeleton application. It would have been dismissed.
That's right.
But you have to be careful with bankruptcy because people get wise to it.
Uh-huh.
Be like, Charlie, thank you very much for your offer. I have now filed bankruptcy and I have a little bit of time. Please get lost in your students. And I'm going to file the MLS with an agent and get double my money. So you have to be careful with that option.
Well,
Yeah.
yeah, because I am a member of the bankruptcy bar, I should say a couple things. One, even an individual filing for bankruptcy has to meet the jurisdictional requirement of taking a credit counseling course, which can be done online. So if they show up in person without that certificate, and the clerk will typically turn them away. So there are a few, even if they're not an attorney also needs that and can file electronically, which is a lot easier. But you have to remember the bankruptcy court, once a bankruptcy is declared, the bankruptcy court has jurisdiction. If they have a lot of other debts, it's possible that other things could happen. They can move to dismiss the bankruptcy, but a lot of things can happen once the bankruptcy court has jurisdiction.
Yeah.
So it's not inconsequential, particularly if they filed bankruptcy before. It can trigger a lot of problems. So it is usually better to have an attorney, but the person, if they want to make that decision, they can do it. And the other thing we teach as part of our course is giving out a lot of free information. I mean, if the worst thing that happened in this situation is she realized she had other options, okay. I mean, we're not trying to trick people. And so the student may tell them, you have an option, you can sell it to us, you can file for bankruptcy, you can take it to a realtor.
And she was at the mercy of we were at the mercy of a wholesaler.
Right.
So we didn't have direct control over the owner like we normally would.
Of those relationships, yeah.
So.
Charlie, is the moral of the story is to go to Starbucks more often?
Probably.
No,
Always be marketing.
That's at ABM. That's what I was about ready to say. The moral of the story is ABM. I can't tell you how many times I've been in a Starbucks and I'm talking to somebody because they want to meet at a Starbucks, and people always overhear our conversations. You're close together. People overhear your conversations. You're talking about real estate investing, and everybody wants to be a real estate investor. Let me be a real estate investor. And so it just, one thing leads to another, and ABM, right? Okay, so let's talk about really quick, and we'll move on because we got to get to the deals. Here's how we built the loan. He bought it 710, right?
710.
Bought it 710. At the time, we thought it was going to need a $200,000 renovation. So all in, he was in at 910. We had the ARV about 1.25 million at the time. We were willing to lend, I think we gave you an $875,000 loan. So we lent $675 towards the purchase, $200,000 of a renovation budget, and he came up with about $87,500 out of his own pocket with the opportunity to make about $340,000. Yeah, right? Not bad. Now, that's not true though. That was at 1.25. He thinks he might be able to sell it at 1.5, 1.55, so that number went up a little bit. So if you guys need a loan, call Chris. And that's basically what happened. Wholesaler submitted the contract. Wholesaler drove the owner to the bankruptcy court. I drove to the auction to get it canceled. Lender 410 lender decided to cancel the auction. Chapter 13 bankruptcy was filed before 4 o'clock. No BK paperwork was filed, so the bankruptcy got dismissed. It got dismissed on September the 1st. He then bought it on September the 4th. Purchase price, 875 loan. The ARV, I guess, is a little bit more than 1.25 million. Congrats. Any questions for Chris?
Thank you.
Any questions for Chris?
For you, Charlie, so the model here is that you are available for your students up until midnight.
God. Man, I tell you, they asked me that question on Monday night. The answer is, unfortunately, yes. I'm available. That's the one thing about our business is that, because we've been in the hard money space for so long, unfortunately, and Tian will tell you, we always have to be turned on. There's not a time where we can't turn off. Sometimes on the weekends I do turn off. Saturday and Sunday I won't turn back on until late Sunday. But yeah, we're pretty much unfortunately always turned on. But it's part of the game. We get it. Thank you. Huh? No, we love it. No, there's no doubt about it.
Yeah, Charlie did it for free too. So.
Yeah, I mean, yeah.
Yeah, Charlie didn't get any money off that loan.
You know it hurts, right? You know you hurt me, right? You know what? I need you back in that Adidas sweatsuit. I don't recognize you in a vest and a suit. You look lawyerly. Yeah.
Charlie did it all for free.
All right. Any questions for Chris? Question for Chris before we move on.
Good job, Chris.
Thank you, Chris. Yeah, appreciate it. Jan, come on. All right, the next part of the meetup, I'm sorry we're a little late, but we're going to go ahead and cover these deals. It's the deals presentations. We got about 9 of them to cover. You guys get ready to present. We don't vet the deal itself. We do vet the ownership and the control of the deal. So that's what we do. We're going to vet. You got a microphone? Where's the microphone? We need a microphone. So we will vet the actual control and ownership of the deal. Are you the owner? Are you a wholesaler? Are you a general partner? Where are you in the deal chain? We'll vet that. We won't vet the deal. Go ahead.
Okay, so...
Who's your name and phone number?
Oh, sorry. My name's Tian. Phone number is 571-358-9382. Also up there. So I have an incredible townhouse in Fairfax that I'm selling. It is right by Fair Oaks Mall. If you guys know where Northrop Grumman is over there, it's over there. And it is about 2,600 square feet, 3 bedrooms, 3.5 bathrooms. Do we have pictures?
I do.
I know. Okay,
Sorry.
we'll get to them. No, do you mind going back really quick?
Okay.
Sorry, I just want to make sure we had pictures. So.
Come on, we're a professional establishment over here.
Thank you. It's nice to be part of a professional establishment.
Okay.
So really nice house. It's pretty much cosmetic. And I'm asking $690 for it. My contractors did just go there, and they gave me a reno estimate of $46,000, and my contractors are not cheap. So $50K, if you want to do a little extra, maybe add some staging. It is currently occupied. However, I just helped the seller find a place to lease. She signed that lease today. It starts December 1st, so she will be out the first week of December. And we are not closing. It's in the contract. We're not closing till we are closing, but anyways, closing is going to be late next week. So she's using some of those proceeds to put as like a 6-month deposit, but she's putting her security deposit down tomorrow. And like I said, she signed it this morning. So,
All right, now I got to caveat this a little bit. I know the fact that she owns it. She didn't put the street address for a reason. So if you guys are interested in it, she'll give you the street address.
Yeah.
Yeah, she didn't feel comfortable with the street address, so we've got to caveat that.
I don't trust anyone. I'm sorry.
All right. Pictures there?
Yep. So you can see 2-car garage. That is the lower level full bathroom. So it's a basement full bathroom, walkout basement. It's a little dark, but all those floors are in good condition.
Are those cherry cabinets? What kind of cabinets?
Those are cherry cabinets.
Cherry cabinets. Is it stainless steel?
Stainless steel appliances, yeah. But my contractor's estimate included leveling out this really big island here and just making it one level so it looks more open.
What are the existing countertops?
Granite.
Granite.
Yeah.
Okay.
So, but we had it in the estimate to change all those out, and then the estimate also included tiling all this and. But anyways, it's a great property.
What's it close to?
Right by Fair Oaks Mall, all the freeways. It's, it's a really, really nice property. I think the tax assessed value was 2025 is like 750. So
750, 440. Yep.
Yeah. So 2026 is right around the corner. So that's going to jump up. ARV is 850. That's a solid number. We've got comps. Here you go. Some comps, 851. And that one's even smaller, too. That one's about 300 square feet smaller. Not that that's that big of a deal.
2260. Let's look real quick. It's about the same. 2082.
Well, no, 2082, that's not
that's
correct.
above. Okay.
Yeah.
Okay. And then the next one is?
This one, 830. I don't know. I've had notes on here. A little bit smaller.
Then we got an 850.
And then we got this one that's 850. So
we've got comps that support 850. It's a good location in Fairfax.
Yeah, it's a really, really nice location. So if you guys are interested, let me know.
Another one.
Was this on the market? How did you find it? What kind of property is it? Besides the townhouse, I mean, is it pre-foreclosure?
It was a pre-foreclosure. Yeah, it was. She's a distressed seller. Yeah, it's off market. It's off.
I have to caveat.
An assignment?
This is an assignment, yeah. But I have to caveat one thing, guys. I have to caveat one thing. Everything we do is off market. When I say everything, I mean everything. We're not buying things on market. That's for the normal retail buyers who know. It's not what this is about. Sorry.
Well, it turns out we have an entire class on that. And obviously Charlie talks a lot, and we talk a lot about how it works, but I mean, some of it is, I'll even give Tien credit. She's very good at what she does in talking to people, but there are definitely quite a lot of answers to that, how you find them, making lists, walking, looking, how you do all of that, which I find as a lawyer mysterious because it involves talking to people. But Tien is quite good at that and knows how to keep the list and find it. So I don't mean to discourage your question. It's just, I guess what I'm saying is it's simple in concept. It's hard in execution.
Right.
There's a lot of detail about how to do it.
So I just wanted her to identify that she's stressed and,
I'll give you a secret sauce. It's a pre-foreclosure that she probably called the homeowner on. That's why she doesn't want to give the address on. Because
that's okay. It's okay. I know how to find pre-foreclosure.
Got it. And he teaches a class on it after it and wants to here.
Yeah, but I mean.
Asking a doctor how do you do surgery. You don't do surgery.
Well, and it's a good point. I mean, it's a good analogy in that you could say as a surgeon, well, I cut the person open, I cut out the bad part, and I sew them back up. It's absolutely true. And so the general concept is very simple. It's identify pre-foreclosures. Charlie showed you one good way to do that is to look at auction notices, but it's not the only way.
Yeah, one of the things you have to understand, and I'm sitting up here, right, is that I have a fiduciary responsibility to my students. And so we're going to give you public some of the macro stuff, but one of the things that we are not going to talk about in here is the micro. Because there's a lot of micro things going on that we do, right? And I know I'm talking to a bunch of realtors who have been in this business for a long time, but this is the way we grew our wealth. And it's at the micro level. And so I owe my students the fiduciary to keep this at a very macro level. So we're not trying to be rude or anything, but it is what it is. Pre-foreclosure. Congrats.
Yeah, and also I just want to note for this particular comp, this was one whole bathroom less and 500 square feet less.
All right. Any other questions for Tien?
I did, yep.
You know what it is? Do you remember the rental
Like
on it?
36 to 38-ish. 38's on the high side, but I mean, there's not very many for rent in this area.
Yeah, but does that meet our 100 times rents rule?
No.
Okay.
Yeah.
Probably not a good rental.
I would
good
definitely
fix
not.
and
Yeah, I would definitely not
Right.
buy and hold this.
flip. All right, Mike, you're next. Any other questions? We gotta get moving. It's my fault. We're at 8:33, and I was hoping to have the deal stuff started by 8 o'clock. Sorry, guys, but we'll try and get you guys. We'll get through this. Huh? Okay, sorry, man. I know you guys had stuff to do. Sorry, man. Who are you?
My name's Mike. I'm a wholesaler. I'm going to present this deal. I'll try and move really quick through it. This is just roughly 36 acres of land in Lumberton, North Carolina. I'm wholesaling the deal, so I have it under contract, $130,000. This is a unique deal. I'm actually considering trying to buy this myself. So the land itself is, like I said, 36 acres. About 30 of it is timber, and about 6 of it is soy fields. And the timber has got a contract on it right now where they're thinning the timber because it's overgrown, and they're expected to get about a $15,000 payout on the second week of December. Now, the company that's doing this thinning said that ideally you'd thin it the second week of December. In about 4 to 5 years, you could clear cut it, which would yield about $1,000 to $1,500 per acre. Okay, so for 30 acres, you're looking at 30 to 45K. And then after that, the idea would be you could plant pine, this like genetically engineered pine tree that will mature in roughly 12 to 15 years, and with 2 thinnings and then a final clear cut. So that's the concept with this land. Now you could subdivide it. There's not a ton of road frontage. They do have 2 road accesses. You could subdivide it and get rid of it. There's a road access right here, and then there's road access on the backside there.
There?
Yeah, that's correct. Now the soy fields, it's kind of a handshake agreement between.
Where are they?
Right here.
Okay.
That's the soy. It's a handshake agreement with this guy. They're not charging royalties, but they just cleared the soy, and they're not doing any sort of crop rotation in the wintertime. So the phone number there, that's actually not my phone number. That's my JV partner who's actually dispoing the deal, but that is my my email. Right, the comps.
That's your JV partner?
That's my JV partner, that's correct.
Your email, right? Sorry.
That's my email. These are the comps that we found in the area within the last year and a half for land.
But what is your phone number for everybody?
Okay, so you can put, my phone number is 571-225-5983. Now, if you don't want to go with this land, this timber idea, you could clear cut the whole thing right off the bat. And that would get you about 30 to 35K. They had an offer about 2 years ago from a company to clear cut the whole thing right off the bat to get a 30 to 35K payout.
And then what's the other thing you might want to do?
In addition to?
You might want to buy it yourself, right?
Right, yeah. Like I said, I'm actually.
Which means?
Yeah, so which means that I would be looking for funding on this deal. Right.
Okay,
I'm like teetering on whether or not I want to like buy it myself and have a pine tree farm or and soy, right? But what I actually would do is the guy that owns the soy right there, or the guy that's doing the soy farming, his brother owns a 5 acres just to the south. If you want to, can we go back to that picture? Okay, so this The guy that owns this part right here, this is his brother. And so what I was considering doing was, if I buy it myself, just trade this in for this, so that way I can get road access and then have the whole thing being.
Yeah, but hold on, let's take a look at this real quick. What's that right there?
Yeah, that's a community.
That's a trailer park, right? I don't know. Oh, it is. A lot of crime. So you keep it as land? So you keep it as land? Okay. Yeah, I get it. I understand. All right, so he's looking for two things. He's looking to sell it for 130.
That's right, 130.
But he's also looking for a funding partner if you guys want to finance some of that deal to buy it.
Good question. I'll have to get back to you on that.
Yeah, we didn't have the tax record on it. Any other questions? All right, thank you, Mike.
All right, thanks.
Give it to Christian, come on. All right, next deal we got 18354 Sharon Road, Triangle. Again, we haven't vetted the deal, but I have vetted the ownership of the deal. I know that they're the contract holder, just like I know that Mike was the contract holder of his deal. All right.
Hello, everyone. My name is Christian Ramirez. I work with Forever Home Buyers with Joel. Phone number 571-554-4716. Yeah, so we have this property here, Triangle, Sharon Road. It has 8 beds, 4 full baths, 3,466 finished square feet. We're asking $400,000. Renovation cost to be like $125,000. ARV could be potentially about $700,000. And yeah, fix and flip, buy and hold. There's a lot of margin for you to kind of work out what you want to do with it.
And I think there's pictures.
Yep.
I think I also have the tax assessment too, yeah.
Yes, yes. So the tax assessment on this property is $645,000. And there's actually a total square footage of 6,932. So there's a lot of square footage that you can kind of play with and kind of figure out, you know, what to do.
Well, there's another play here that I didn't look at. What is the lot? Is the lot flat? Joel's lot flat?
Not really, no.
Because it's got an R4 zoning, 1 acre. So that's a 4-house subdivision play by right use. So that's another thought. I just saw this for the first time, guys. Like I said, I vet the ownership of the deals. I don't vet the deals. So this definitely is that's an interesting play as well. I don't know where the house is situated on the lot.
Mm-hmm.
So you might want to look into, if the house is not centrally located to the lot,
mm-hmm.
maybe carve out a half acre
Mm-hmm.
and then do two houses on that half acre and keep that house on a half acre. So
Wow.
that's a thought too. I just noticed that. I'm sorry, I didn't really.
Yeah, there's definitely a lot of land there, but yeah, we didn't even think about that. That's great.
Can I ask a question? You and Joel obviously are experienced rehabbers. You guys flip your own homes. Why aren't you guys doing this one yourself?
It's a great question.
That's usually why I don't pull the trigger on a lot of
Sam is lazy.
No, yeah. Yeah, I mean, right now we do have a lot of projects that we're working on. A couple in PG County.
I know
and,
why. Because they bought it for less than $400,000.
Public.
And what is the issue with the home? Obviously, you guys are greedy flippers.
Is there anything else?
I'm asking you. Because the last 2 homes I bought from flippers, a lot of them turned out to be a mobile home that they said was a single family.
No, you left something out. They're greedy flippers with the greedy hard money lender. Why are you?
And then the other house I bought, they had no water in the home. And so, but my point is, so like whenever I bought a house from a flipper, my last 3, they've all been catastrophic. So I'm just wondering, you just have too many projects right now?
Yeah, I mean, that's the main thing.
And they can turn the money faster.
That too.
Turn it to another deal. So you get caught up in a large 6,000 square foot flip. How many man days does that take?
Yeah, it's a longer cash
just
conversion
to take
cycle
care
too.
of it?
Bigger than that.
To do it correctly in Triangle.
It's almost
And then you have
7,000.
a lot of time.
Yeah.
It's almost 7,000 square feet.
So you could do 3 other deals.
You know, it's interesting because, Sam, the tax record is showing an 8-bedroom house.
It is 8.
How
Is
many?
it?
Yeah, but how many times have you seen the tax record show that?
Oh, wow.
It was owned by it's owned by a nonprofit.
There you go.
Yep. Yep.
There you go.
I was gonna say, Sounds like
You the buyer, Jad?
Yeah.
I love you, man. I love you, man. And no, but I'm going to say this, right? Like you always do, just do your due diligence. I think the hardest part on this property, and we all know what the hard problem is, the hardest problem is getting a good comp on it. That's going to be the challenge. But the comp right here, if it's almost 7,000 square feet, $100 a square foot puts you at 700 grand, just like that.
Oh, you gotta cut some trees down.
That's exactly right. That's the play. That's the play. I think there's two plays on this. All dependent upon where the house is sited. If it's not centrally sited, carve out the house on the half acre, subdivide the other half acre, and then put it into a group home with the 8 bedrooms. That's the play.
I
That's the
actually
play.
don't think it's centralized.
Now, I'm not sitting here trying to talk you into keeping your deal. That's the play, brother. But I don't know anything about it. All right. Any other questions? Any other questions? We gotta move on. Christian, you good?
I'm good, Denny. Well,
Thank you, Chris. Huh? I agree. Totally agree. That's why we're here. All right. You good, man?
Yep.
All right, Jordan. Jordan's got 3.
While our next person's coming up, I think that was useful discussion because there's a million good reasons that somebody would sell that, and there's a million bad reasons.
Yeah.
So that comes back to what Charlie says. You have to essentially assume the reason's bad until proven otherwise
Yeah, I
by
agree,
your
Chad.
due diligence.
Sure. Yeah, I agree.
Yeah.
It's the lawyers in us. It's the
Yeah.
lawyers in us.
I'm looking for bad. Yeah.
Yeah. All right.
Hey everybody, my name is Jordan. I'm with Homes for De Niro. Some of you guys might know Armando in here. So that's who I work with. We're putting over here, maybe. That's me. Here I am. You might have met me in the last few days, weeks. But there's just one thing I want to say. And here's how what I like to see in this room is that we're all connected, right, in this real estate market. And as a wholesaler, people look at it as kind of funny sometimes. But every single one of you in here is our friend. So if I was to look at all of these stickers, every single sticker over there, I am so happy to be able to meet with you guys, to get all of your numbers, and to share some deals. I'll do it fast since we're a little bit late. But it's just very exciting for me to be here and for me to be representing Armando and our team. Thank you.
Yeah, thank you. Thank you. And just let me caveat you as well, guys. One of the things that we're trying to do is get more, I call them the pinkies. We want more pink wholesalers here because that helps drive the deal flow throughout this community, which we're trying to build. And so you're more than welcome. And so at the end of this meetup, you fixing flippers or buy and hold investors, you better go get on his cash buyer list. I'll tell you that right now.
And the real estate agents. I really love working with all the real estate agents.
Yep.
Jasmine's one of my #1 real estate partners. I plan on meeting many more like her. And I learn a lot, like wearing a face mask when you go into one of our off-market properties. You never know if you're going to step in a hole, right?
Okay.
You would never know that, but from a wholesaler. So, yeah. And by the way, we do have offices in Rockville. So we have our 3 departments. We have the acquisition, the disposition, and our cold callers. And we also do some marketing on Facebook. So that's where we generate a lot of our leads. We spend about $40,000 a month to put in, so we build that seed in there, and in return, we accumulate happiness.
There you go.
But in general, like we were talking about trust, I think with, what's your Jad, is that you got to be able to trust a wholesaler. There's a lot of wholesalers here. Yeah, not here, but like in Texas, that they get these contracts, right? And it goes off into all these daisy chains kind of thing. And you really want to be with a wholesaler who's genuine, who wants you to make money, because us as wholesalers, we don't make that much money. So we're like really tight on where we get our contracts. So at the end of the day, for the flippers that come to me, like we still need to go for like a price reduction for most of our things. So, you guys got to keep that in mind that, us as wholesalers, we're kind of a little bit, the price that we make is not that great. But, you know, at the end of the day, we're here to communicate with everybody and to really get along with everybody. So, and that's what life's about, right?
All right.
All right, let's take a look at the deals.
And you've got 3, right? You're presenting 3?
I'm presenting 3,
All right.
we'll do it really quick, right?
Yeah.
Since it's already 9:15, I guess. Here we go. We got Westmore Ave in Rockville. This is a tear down. Love this place. I was there myself. There it is. We were scared to go in it, but it's very beautiful. Look at that thing.
It looks like
So
Looks
it's
like it had a cellar.
0.14 acres.
Yep.
Tear down.
Yep. And as a matter of fact, there's there's a house here, a house next to it, and another house. We actually bought one of the houses 2 over that we're going to tear down ourselves. So we just don't have that capital right now, and we got a bunch of other projects. But if we did, we would tear that down. But there's one in the middle that's a really nice house. But this is in a very nice vicinity in Rockville. So really nice. And this has been, we've had this for about 3-4 days, and I already have like 3 inquiries on it. Okay.
Yep. And then we got some land comps in
There
here for
it
you.
is. It's just beautiful, right near the town center. We only deal with local, by the way, our company, so it's all DMV. All right, let's go to the next one here.
Land comp at 350, another land comp at 400. Now, these are
Mhm.
actives, but these are comps within the Lincoln Park area for these guys.
Yeah,
And-
so you know, a lot of people always ask us, like, why do you have to pay the price of the house if it's a tear down? Why not just the land? And I think because you have to buy the house, right? I mean, you got to buy the house. I mean, it was owned by somebody. So
All right, any,
we get that question. Actually, it's a good question. We got an ARV on that about 800K. So yeah, if you build that up, you could always make it a little bit more. But the comps in the area are of that.
yeah, I was seeing, when I looked at newer houses within I put a square around that blue dot, right? And I look at brand new built houses in that area, number one, to see if brand new houses are being built. And what I was seeing anywhere between 900 and 1.1 million around there. It's a really good location off of 270. It's close to Rockville Town Center, so it's good.
Have you investigated setback requirements? And because the footprint of the existing is pretty small, it appears. Like, how much can you expand that footprint?
0.14 acres, that's basically it, yeah.
Yeah, they have a driveway in the back there, but I think it's owned by the person in the middle of the 3 of us. But we have a front, and yeah, we have all that information. Just ask me. We'll get together later.
Yep.
You guys form a line right here. We'll just
Is that
start
your,
talking about it. All right.
But Jordan, that's 202-932-0578, that's your number, right?
Yeah, that is not my number. Actually, I'm 570 from Pennsylvania.
Whose number's 202?
Well, it might be Armando.
Okay.
You would know, right?
So take
Somebody
down,
over here will
sorry
know.
guys, so take down Jordan's number.
But it's
Jordan, what?
you can take it down later, but it's 570-606-9393. That's not hard to forget, right?
How about the email address? That's just a generic email address?
Deals, you could do that, but that's actually one of my dispo teams. Mine is going to be j.robin@homesfordeniro.com.
All right, y'all got that? So it's our, it's not our
j.robin
problem.
at homesfordeniro. Find me on Facebook. I'm pretty active on there. 570-606-9393.
Yeah, and just for information purposes, guys, it's not easy for people to come up in front of this audience and present properties. So I'm happy because I don't have to do the presenting. Somebody else can present. So we
This
really.
number actually might be the office number. We
All right.
have like a bunch of numbers here.
All right, but y'all got Jordan's number,
can
right?
always call me there, try me.
It's our fault. All right, what's the next one?
All right. All right. So,
okay.
so this one's actually really interesting. This plot of land that we have has 1.3 acres, and it's over in Fairfax Station. So this is a very unique opportunity for a great investor that wants to build a multi-unit. Right now, it's zoned for a single family, but the county is up for a rezoning with a plan. So we've already been in contact with the county. We have all the records that you need at our disposal to show you guys that are interested in land. Land isn't really a lot with wholesalers, but we come across it every now and then. We recently did a price reduction on it. It's at $399.
Oh, $399? Okay.
Yeah, we did a recent price
All right.
reduction on it, but and it's very negotiable. Like I always tell everybody, fix and flippers. Like when you get your wholesalers and they ask you to put down like a asking price.
OBO.
If you go and you see a house with a wholesaler, Okay, you should be able to offer anything. You should never walk away from any property that you see without offering it. And you should be able to offer it anywhere, because if you know the right wholesaler, we'll go back to the seller and we'll try to price reduction it for you guys. I mean, it's an honest God
And
truth.
so it looks like from the picture that this is a flat lot?
Yeah, this is a flat lot. It actually
1.3?
used to be like the old parking for the Fairfax station. I don't know if it was like the Metro
All right.
or what it was,
All right,
but
all right.
so
We'll
yeah.
have to,
So the next question will be like, does it have septic and all that? No.
You guys
it's all
will have
in-
to call them and get more information on it.
Yeah, you'll have to call and get more
Yeah,
information. We'll be
yeah,
here about
I
midnight
know.
with that.
That's the thing.
Huh? So yeah, it could be rezoned to build multi properties in there, like
Well,
something
I
like
would
that. It's
stress,
small though.
I would stress the thing that we don't have part of this package, I don't have the tax record in here. So call these guys and at least get the tax ID record. Armando, he didn't send me the tax record because that would tell the zoning. I really, like I said,
Yeah.
I know they have it under contract. I can't vet the deal because.
Yeah,
okay,
let's
all right.
talk. Let's talk, everybody.
All right.
We'll form a line right here, all right?
All right, next one.
All
Last
right, next one, last one but not least, 4509 Oliver Street, Riverdale, my favorite place. All right, it's a 3-bed, 2.5 bath. Prices, we're going for 45 on there, or the best offer.
450,
and,
yeah.
ARV on there is 750 through 800, and it's, let's see some pictures of this bad boy. There
That's
it
the
is.
front. That's
Wow,
the
look
front.
at
That's
that
all I
thing.
had.
Ain't that beautiful? This is like, no, anybody's gonna get that. I just want it just looking at it. Right? Look at that chimney. Maybe, I don't think that.
Hey,
there might
look,
be
I
an
told you we'd
HOA.
entertain
That's
you.
pretty clean, isn't it? You think that has an HOA on there? Maybe.
No, there's no HOA.
All right, that's
on there.
clean.
No
I
HOA,
don't know.
baby.
I've seen it.
No
I don't
HOA,
need a mess
baby.
to go in there, but yeah, and there you go.
And I got comps for you.
Comps from 8, and there it is again. Is
We
that
got
the-
a
what is that?
635, we got
The
a
back of it?
625, and
Oh,
a
that comps. Yeah, there you
880.
go.
Yep.
So yeah, we have about 8 to 9 contracts right now. We get more and more every day. So some leave, some come in. So please, I welcome you all to meet me later, and I'll be here.
All
Probably
right.
talk in the parking lot. We'll do whatever. All right.
Thank
Have a
you.
good
And
day.
any other questions for him? No questions?
Can you show the original page, Charlie, the price and the ARV that you have? Okay, so 5 to 450.
750. 120 put you in at 570.
And just remember, like I
I
said,
mean, even if it's at 700, you're at 570 with the 700 ARV.
and it
There's
depends
still
on what
there's still money in there.
Yeah.
Yeah, there's still money in there.
Yeah, like I
There's still
said,
money.
like again, the point of this is that if you're ever dealing with a wholesaler and they're genuine, I always say, like, you should always put in an offer. It doesn't
Yep.
have to be asking. If you think it's going to work there, that wholesaler is going to work for you. All right, and we're going to go back to the seller, and then we're going to try to work out a deal, and that's what it's about. Okay.
Thank you very much. Any other questions? Thank you, Jordan. Jordan, thank you. Thank you. I know it's not easy. All right. The next few deals, I'll go quick. I see it's 8:55, so we'll try and get you guys out of here by 9. You gonna stay, huh?
I'm gonna stay.
Oh, you're gonna do it. All right. So let me get to the ad hoc real quick. I got a few more deals to present, and then we'll get to you real quick. This is a REO property owned by, you guys heard of Washington Capital Partners? They took back a property in Baltimore. They're looking for 249 or best offer. It's 8 beds, 5 baths. Reno about 75. ARV's 350. Fix, flip, buy, hold. Daniel Huertas is the owner of Washington Capital Partners. Make him an offer. They want to dump it. All right. So keep that in mind. He's looking for 249, but if you come in lower than that, he might take it. That's his email address. That's his cell phone number. He's not here to present it. Those are the pictures. This house is in the MLS, but he wanted me to present it. He was supposed to be here tonight, but he's not. There's a tax record. It's a pretty big house. 2,900 top, 1,302 in the basement, 4,200 square feet. I don't know the area of Baltimore, so I really can't comment on this. I just know that he's the owner of the property. WCP. Another, yeah, Washington Capital Partners. It's called an REO property. He's one of my complementary competitors in the hard money space. Us hard money guys, we compare notes and we talk to each other. We know who we are. These are comps, 345, 350. So it's somewhere in the 350 range. Okay? The next one is Harold Latore. He's got 2 deals. Harold is one of our hard money borrowers. He's been with us for about 3 or 4 years. This is the one in Manassas Park that you might be interested in. 3 bedrooms, 1 bath, 1955 built. His price is $375, our best offer. ARV is $475. Rents are about $2,500. It's a Cape Cod. There's this thing called ADU, accessory dwelling unit. Don't get it confused with affordable dwelling unit. This is an accessory dwelling unit. The city of Manassas and Manassas Park are very aggressive in allowing you to build accessory dwelling units on single-family lots. This is within that range, okay? You're going to have to call them to find out. This could be a 2-unit property. You got your 3-bedroom, 1-bath property, which is a Cape Cod. Put a second bath in there, make it a 3-bedroom, 2-bath. Then you could build a 2-bedroom, 1-bath ADU on the property, accessory dwelling unit. You got two units. Yes, same Harold Latorre. He didn't tell me. That's why it's blank. My guess, a rental-ready renovation's probably $50,000. I probably wouldn't use this as a fix and flip. I can't say that, but I just vetted it, okay? There you go. He's a wholesaler. Call him up. I got to show you one that we own, though. It's a rental comp on Baker Street, 144 Baker Street. That's one that we just rented out in July for $2,500. The beautiful thing about our Baker Street is that we are thinking about putting the ADU of our own in the backyard. That's how we know about it, because this is Manassas Park City, and they're very aggressive on accessory dwelling units. Okay?
Charlie, who runs that process, the regular building department there, do you know?
Zoning.
Zoning.
Zoning, planning and zoning. Run the process, and they'll be glad to help you out. All right? It depends on where the house is situated on the lot. It depends on how big the lot is, and it depends on where that accessory dwelling unit is going to go on the lot. But that is good. Probably in the future, 703-587-2475. Mr. Sam, we'll start figuring out an ADU if we ever get any free time. All right. All right, do I have the tax record? Yes, this is the Manassas Park City. So you have the city of Manassas, which is a totally different jurisdiction, and you have Manassas Park City. Maybe it's not big enough, 8,200. I don't know what they're, you're gonna have to call them, guys. I don't know what Manassas Park City's variance is. It could be less, I don't know. They want higher density though. All right, that's a good point. So that's a good point for y'all to find out. Again, I'm not vetting it. I'm trying not to at least. All right, last deal. Where are we at? Okay, 7555 Allegheny Road. This is a buy and hold as well. I think it could be a fix and flip. It's one of those split foyers, up the bedrooms, down the kitchen, maybe another bedroom. 3 bedrooms, 1 bath. You can add another full bath. 936 over 936 square feet. He's asking, ARV's about 550. He's asking about 450. Let's see, what else do I want to talk about this? Not much here. These are kind of the comps. 530. This is in a development called Loch Lomond. It's right down from the Jukebox Diner. If you guys know where the Jukebox Diner is, it's right down the street. And that's basically it for Harold. You got his number up there, 571-243-7804. That's his email address. And that launches us into the ad hoc deals. First in line. You got a microphone? Where's the microphone? Right there. So now we're talking ad hoc deals, guys. If you guys have a deal that you want to present that wasn't up here, please feel free. It's 9:01, and take your time.
Hello? It's working? Yeah. All right. Thank you, Charlie. I appreciate it. Very happy to be here. Didn't know that I can present my deal here.
And your name is?
My name is Jasmine Farouk. I've been doing this for 20 years.
Phone number?
703-919-3304. 703-919-3304. And I mostly specialize on pre-foreclosures, acquisition. I'm a paralegal, commercial real estate. And for the past 20 years, I've also been doing flips. Who likes subtus? Who's familiar with subjectus? For the rest, you guys can be dismissed. You don't need to stay. Because
No. This is important. Sub two means subject to the existing financing. If you can buy a sub two at a good interest rate, you'll want to listen.
Yes. So this house is, are you familiar with Petworth, DC? It's a very nice house in Petworth. This house can be up to $2 million if you make a condo conversion. I have it for $430,000 just for you to have an idea. But actually the SAP2, I have the documents here so I can share later on when with whoever is really familiar with how you do SAP2s. You can get it for pretty much $40,000. The property gives you a rent of $4,000. I also have the rental meter here. And you guys would probably ask why you are doing a SAP2 while you could actually do these kind of things differently, right? And the reason is because there's tenants in the property. So whoever knows what's tenants in DC needs to understand that we're gonna need to evict them, right? And that's why it's a SAP, because otherwise I could only be making $60,000 on 430. I sell it easily for 520, 530. But that is the reality. But also you can do a loan modification. You can extend the loan while these people is getting
All right, hold on. Let's talk about it. Let's talk about it. How much is the first trust on the property that you're sub-2ing?
Total on the loan that you're going to have to pay is $407,000.
407?
And the money, yeah, $407.
Okay. What's the interest rate?
Your interest rate is 5.7%, and your payment is $2,400.
And how far in? When was the loan originated?
The loan has been originated on 2003.
Guys, that's pretty good.
It is pretty good.
2003. What does that mean, guys? That means you're really, really far into the AM schedule.
And obviously, she's going into pre-foreclosure. She's losing the house. So she only wants $10,000.
So this
and she gets exit out.
So this is good because here are your boogers. Booger number one, hire Jad. Where'd Jad go? I'm pushing Jad. He leaves. Hire Ed Grass to do the DC eviction. He said no really fast. That's booger number one. Evicting somebody in DC is a problem. All right, problem one. But that's sub-2. It's really, really, really far into the AM schedule, so that's pretty good, right? The interest rate's okay. The rents compared to the payment are really, really good. So it might take you a minute to get the people out, but one of our strategies is to go ahead and offer them. Have you guys offered the occupants keys for cash?
Waiting cash for keys, but she's waiting on her SAP2, for her Section 8, and that's going to be in January. So she's going to leave anyway.
But wait a minute, though. If she gets her Section 8 in January, why can't she just stay and use the Section 8 voucher on that particular house?
She don't want to stay in that property.
Good.
It's too shitty for her.
I get it. All right.
Yeah. Unfortunately, they destroyed the property actually, but
it's
now
it's in an area called Petworth.
By the way, the Section 8 is paid $8,000 to this property. If you guys willing to do Section 8, I don't like Section 8.
It might be worth. You guys might take a shot at it, but I would say be experienced. I'd say be experienced in Washington D.C.
Yeah, I need someone that knows DC.
You can't have stuff.
And knows SAP2s.
And the equity's there.
The equity is absolutely there.
Sure.
The ARV is $800,000 minimum.
Yeah.
And if you make a condo conversion, which all the other houses are,
Sam, what did we sell 7th
2
Street
million.
for? We sold 7th Street for $800.
Yeah, 7 and change. Yeah.
$775.
Yeah.
We sold one in Petworth just 2 weeks ago for $775.
How much you bought it for?
Well, I can't tell you all that.
But
no,
I want to know because I have it for $430. I mean,
we bought it for less than $775.
I know, but
we did good.
I have it for $430. I mean,
$430 is a good price.
Right?
Yeah, $430 is a good price. The sub-2 is a good deal.
Yeah.
I like it. You gave me number again. What's your phone number?
703-919-3304. 703-919-3304.
Great.
My name is Jasmine Farouk.
And thank you for staying and presenting
this.
I'm really happy about this.
Appreciate it. I think this is a good deal.
That's a great deal.
Yeah,
all right.
Appreciate it, Charlie.
Anybody else have any ad hoc deals they want to present? Thank you, Jasmine. That's awesome. Yeah, good. All right. Real quick, if you're interested in becoming a student, scan here to get started. We kind of do what we say. We walk the walk. We have a revamped podcast, Real Estate Rich's Roadmap. That's who I am. Follow us on all of our social medias. Register for the next meetup, December the 10th. And unless you guys have any questions, comments, or concerns, we're adjourned. Sorry we went a little past 9 o'clock. All right, welcome. All right.